Welcome back. I'm Michael Bull, and this is America's Commercial Real Estate Show. This segment is brought to you by Bull Realty Asset and Occupancy Solutions. Visit bullrealty.com. And today we're covering the Deloitte 2018 Real Estate Outlook. My guest is Jim Berry. He's partner with Deloitte. And Jim, one of the things that you have a big chapter in a big area here is unlock the value of REITs, accelerate business. What do you mean there?
Yeah, when we looked at, once again, the impacts of all that's happening in the market, we really wanted to kind of set the table. And so one of the first things we focused on is the disconnect that has continued between net asset value and shareholder value, or share price within REITs, and in particular certain REIT sectors. Certainly have seen a variance of that, where you look at maybe some of the non-traditional REITs that have come into the market, data centers being a great example of that are actually outperforming. But then, some of the more traditionals, the good example being retail or office, where that gap has continued to widen. And what might be the impacts of, or what's really impacting that and causing that continued divergence, and what are some things that should be looked at to try and solve for that?
Yeah. Well, I think some of the people would think that the REIT values may adjust up and down kind of with the stock market, but real estate's more stable, right?
That's correct. And that's one of the points that we actually make when we think about maybe three things to focus on. And to your point, Michael, that is one of them. One is just the fact that, once again, as a bigger and a much more sought after segment for investing in the broader public, we're competing for capital more broadly, right, or investors more broadly. And so from that perspective, as certain things happen within the economy, there's a natural attraction to real estate, which may be a more stable provider of return, particularly from the REIT perspective. Now, as interest rates are starting to move a little bit, as there are other alternatives coming into the market, then that investor attraction may move to a different place. So that's, at least at this point in the cycle. So that's one element. The other element that we point to is that clearly within certain sectors, the tenant representation and kind of the noise around some of that, what's happening in other industries, has had a clear impact, if you will, the risk factor of it, retail being probably the prime example. Interestingly enough, for retail, if you look at a lot of the performance there, the underlying value indicators have not changed dramatically for the real estate operator. There's still good operating data and operating statistics, but there's been a clear decline in value there, or shareholder price, once again, probably tied to the information around the retail industry as opposed to the underlying real estate.
Yeah, I think when REIT investors, lenders, the general public reads in the paper every day that online sales continue to grow, that more and more some of these older retailers are having troubles. It almost just makes you think that just the general consensus is that retail's in trouble.
Right, and so it's clearly at a point of change where none of us can deny that. Right. We all live it and experience that every day from a retail perspective. But from a real estate perspective, then the question goes to how do you maximize the value of that asset? And really, we're seeing great transformation within that part of the industry. Now, we probably shouldn't kid ourselves. There's going to be winners and losers anytime there's disruption in anything. But those who are really looking ahead and thinking about it, have changed the dynamic. Think about the way that we may go to a mall today versus the way we went in the past. In the past, we really went to shop to buy, to do something in particular. Now we're going to the mall, maybe say we want to buy a particular electronic. We probably looked online to begin with. We've explored that aspect of it. we're like, I'd like to understand maybe a little more about it. And I see that, here's the place where it's, located at a convenient location. Oh, and by the way, I know this great restaurant that just opened there. Then so we'll go, have a buying experience, or at least learn more about what we're thinking about buying, but then have a night out, if you will. So it's more about the experience in retail as opposed to just the buying aspects of things. And so one of the aspects from a real estate perspective is how are you partnering to best achieve that?
Yeah. Well, you asked how we go to malls, and I think the way I always went to malls was I was drug kicking and screaming, and that's still to be the way I go. I'm not real fond of going out and shopping, so the online shopping certainly works well for me. So based on your outlook here, what might people expect for REIT performance moving forward into 2018? You talked about there may be more demand from investors for real estate. You might have some rising interest rates changing things. Some people might feel that that real estate's safe, that maybe with the transparency we talked about in the other segment, that maybe commercial real estate's performance is steady. So what do you think about REITs next year?
Yeah, I think I think you've hit on several key factors. I mean, I will say this. I think that the REITs overall, are in a great position as an overall segment of investing options. And a big part of that does go back to the fact that it is such a much more disciplined and organized industry, and really allows a great option for diversification. In addition, we've also, since REITs now, are separately tracked, it really has attracted additional opportunity for people to look at REITs differently. So I do believe that will provide additional opportunity to attract additional investors. And generally speaking, from a broader investing public perspective, and those who are looking to place money, there's still a high attraction for placement in real estate in general. Now, I will point again, there are probably, certain segments that have a little longer push in that as some of this disruption occurs on the peripheral of the real estate. But strong fundamentals, transparencies to investors, offering good data, emphasizing the strategy, and being able to demonstrate clear progress against that strategy is going to pay dividends. And the other thing I would point out is that the U.S. is still a great place for foreign capital to come in, both in the public markets, but also in the private markets, and looking at safe havens, but also just a good, steady return that they can count on. So I think that capital flow is going to continue as well.
Yeah, that's a good point. And you mentioned interest rates and impacting REITs, and I guess we're expecting, or are you expecting a rate increase here in December? So how might rates increase moving forward as you look at your outlook, and how might that impact REITs and commercial real estate?
Right. We've obviously all benefited from the lower interest rate that's existed now for a while. But I think we all, once again, going back to the fact that we're a mature industry and understand the dynamics, I think we all have built in an expectation that interest rates will move. And we've clearly seen that. Most models that I've seen today have really baked in an anticipation of what if those interest rates do move. And so they're looking at deals carefully from that perspective. The value, I think that the values have underlying asset values have contemplated that. The other thing that I would point out to is, if you want to, people often ask kind of in conjunction with this is, then where are we in the cycle? What inning are we in? Or some of those kinds of things. And in contrast to where we were in like 2008, where we really hit a point of liquidity crisis, and contemplated by the CMBS and some other things, and where we just hit at that moment. At this point, we really have the baseline underlying fundamentals haven't experienced the kind of problems that we might have seen previously. No true signs of overbuilding. continued, opportunities for growth, a much more disciplined approach. Once again, varies by some geographies, by some sectors, but overall very manageable. So
yeah, and it's different. It even sounds different. I remember 07, 08, talking to my sister, and my little sister's flipping beach houses. And I'm like, you're flipping beach houses. Okay, that's pretty crazy. When you're at a party, everyone there's talking about how great real estate is, and they're flipping contracts and things. Might be time to sell, right?
I was about to say, call me when your little sister starts flipping beach houses again, right?
Yeah. When she tells me that again, I'm going to start selling everything, right? All right, we're going to take a short break. When we get back, we're going to talk about the report a little bit more. And this is going to be important to everyone out there, whether you're running a business or real estate. It is about people. It is about your talent. Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.